Hey everybody, it's Steve Phillips with iWIN Real Estate, and today I am going to be talking to you about the shifting market. And I know that you've heard way too much information in the last little bit about interest rates and prices coming down and all of these things that are happening right now. And for the most part, a lot of it is very good and accurate information. What I wanted to give the content today about is things to remember when markets are shifting and what we're going to start to see. So things on our side that I'm starting to see again, you're starting to see old school real estate come into play. If you have been in the real estate investing market, or if you've been in the real estate market and it's only been for the last 25, 30 months, you are not used to anything other than many multiple offers and ridiculously over asking prices and things like that. But for those that have been in the game for a very long time, you remember when things like negotiation was important and conditions were important and getting finance conditions were important, and all of these things are starting to occur as the market is starting to shift. So while you're getting ready to do your offers, or while you're looking at property, remember that you as the buyer now have to start to make a mental shift. The market is changing, so sometimes even the realtors don't know. And what you have is sellers chasing prices that they were seeing many months ago. So the only comparable price that matters to them is what their neighbors, their friends, and their family received in April, or January to April timeframe, and that is what is going to be set in their mind. So there's a lot of confusion about what to do as far as looking at purchase or listing prices. When you see a list price there, you don't necessarily know, is that the market value that the seller is trying to get? Or is that a very low price that they're trying to jump way over? So these old school things of communication, having realtors or having people in the game that are picking up the phone and contacting each other and speaking to each other on the phone to ask questions and build rapport and try to understand the mindset of the parties that are involved. All of these things become very important in a shifting market. The other thing, finance conditions are starting to come back in. The reason that I'm putting finance conditions in for my clients is that I know there's still a significant backlog of files in the hands of mortgage brokers and underwriters from the refinances that are dragging on a little bit. So I want to get my files to the front of the list. I want to have it at the front of the queue. So I'm putting in financing conditions for people so that they can see these things. So the people that need to review the file get that file, and there's a stamped deadline that has to have a review on it. So financing conditions are starting to come back in. Home inspections are starting to come back in. And they're also a condition that you can at least get a little bit more of a deeper dive into the property before you start to buy it. So in these shifting markets, as things are starting to adjust, I think you're going to continue to see these things. I want you to kind of remember old school real estate and the things that are important. As we go forward into the new market, and as if there is another interest rate increase, in the coming weeks, there may be multiples. Nobody has a crystal ball, and nobody's involved in the conversations unless you are. If you are, put a comment in, tell me what's going to happen. But generally speaking, I think that everybody is going to continue to adjust as the market unfolds. And that means that you as a buyer need to be very flexible. In my experience, when these times happen, I find that a lot of buyers, especially new investors, try to pull back. They get a little bit scared. They get a little bit concerned. And so what they'll do is they'll pull back and they'll say, I'll wait until I see what everything happens. It's not a bad strategy. It's conservative. It's good. What I'm seeing right now is that there are still a significant amount of sellers that are chasing those early in the year prices. So there's inventory. There's lots of inventory. There's lots of opportunities. There's lots of houses on the market. There's not a lot of buyers because people are waiting. So we're picking up really good opportunities because there's not a lot of competition. But now there's a difference between a want to sell person and a need to sell person. And the market, when it starts to shift, will start to show who is who. If somebody wants to sell but doesn't need to sell and doesn't get their price, they may start to pull those listings off of the market. They then reduce the amount of supply that we're going to see available. But if they continue to do that, and the properties continue to come off the market, say towards the end of summer or into fall, what inevitably will happen is all of the buyers that were sitting on the sidelines during this time right now will start to call and be like, hey, I heard prices are record lows. Now's the time I want to get in. If that's the case, you may then find yourself with not a lot of inventory at that time. And again, now you're fighting for supply and demand. I mean, that is the simple equation. So timing the market is impossible. You're only going to get lucky if you time the bottom, and you're only going to get lucky if you time the top. What you really want to do is just watch and see, is there a lot of activity on which side? Is there a lot of listings? If there's a lot of listings and not a lot of buyers, it's probably a good time to look to buy and take some opportunities. If there's not a lot of listings but tons of buyers, it's probably a good opportunity for you to list your property. So knowing what the sentiment of the market is in a shifting market is a crucial skill, and I think it will make you a ton of money. So on both the buy and the sell, I should finish that thought. So as we're going into the summer months, and as this continues to happen, and as you see the news start hammering you and telling you all about the prices falling and all of these things, just remember that markets and are cycles. Real estate is a cycle. It's the largest asset class in the world. It's going to go through a cycle, and this is a natural cycle that it's going to go through. You need to be very flexible in these times, work with great professionals, and get all of the active knowledge you can. Speak to people that are in the trenches, that are doing deals every day, that are looking at property every day, because they will give you the most accurate information anyone can. So do your due diligence, link up with good people. Our next iWIN meeting is coming up at the end of this month. If you're looking, go to the website, contact us today, get your ticket, come out and hear some new stories, come out and get some new information. And if not, contact our team and we'd be happy to set up a one-on-one call for you. Until next time.
Thank you for watching. If you want to learn how to invest in real estate from scratch, my team teaches beginners how to use the #1 investment strategy that I personally use in a virtual free training class every month. Go to investortraining.ca/YouTube to register for our next class. That link's also in the description as well. I publish at least 2 to 3 videos a week here, so subscribe if you want to keep learning from seasoned investors like myself and my guests. And if you're just starting out, feel free to ask questions and comment below, and I do the best to answer each of those comments and questions myself. Again, if you're ready to learn the nitty-gritty about real estate investing from a professional investor, register for our next virtual class. That's at investortraining.ca/YouTube. Thanks again for watching. See you in the next video.